Joining me now is Rick Rule. He is the president and founder of Rule Investment Media. Great to see you again.
Mark, nice to be back. Thank you for having me back.
We stood in this spot literally a year ago with the bull behind us. So let's get updated on what we talked about last year and get your thoughts. Gold now is comfortably above $2,000. Among the influences you talked about were negative interest rates, burgeoning U.S. debt and deficit that continues to go up. So just update us on your thoughts overall on the setup for gold.
I'm very comfortable with gold's performance. People here will ask me, when is gold going to move? And I say the year 2000. In 2000, it was $256. Now it's $2,000. It's moved over 24 years, 8% compounded. It's odd that people complain about that. What's changed, I think, is the dichotomy between the performance of gold, which has been good, and the performance of the gold stocks, which overall have been bad. From my point of view, that's a good thing. Given that I don't think that gold is going to give up ground, that means that the delta between the value of gold and the price of the gold stocks probably resolves to the upside. What we talked about last year in terms of interest rates, people will say that the negative real interest rate has subsided. That's because they believe that the CPI is a cost of living index. It's not. From my point of view, the real inflation rate, the real deterioration of the value in my portfolio of the U.S. dollar, I'm American, I believe the U.S. dollar in terms of purchasing power is declining at about 7% compounded, if you include tax as a cost of living, which I do. In that sense, if you're getting paid 4% in 10-year treasuries in a currency which is declining at 7% compounded, you have a 3% negative real interest rate. So I feel personally that gold is still very attractive, relative in particular to long bonds, meaning that I'm bullish about the gold stock complex. You'll recall last year I was probably more bullish about uranium than gold. That's changed because uranium has done what it was supposed to do. It's no longer hated.
Exactly, yeah.
So, in the whole complex, I'm attracted to precious metals. I'm probably, not for 2024, but for 2025, I'm probably more attracted to the silver stocks in the sense that they're hated now too. My experience is that gold moves first, then silver, but I think silver moves further. Somebody needs to be patient to play that game, though.
Well, you talk about patience. You're a long-term investor. You're looking 4 and 5 years down the road. You say that gold and silver, for that matter, they reward you infrequently, but when they do, they really reward you, and you've been a beneficiary of those kinds of moves for 40 years. Can you sort of flesh out that philosophy?
Well, I think that's important to understand. In my experience, precious metals markets do well when there is fear, a lot of fear, about the maintenance of purchasing power in the world's reserve currency, the U.S. dollar. The U.S. dollar has done very, very, very well for 40 years. Gold rewarded us in the decade of the 70s. It rewarded us in the early part of the decade of the 90s. It rewarded us early in the 2000 to 2010 timeframe. It rewards us in 2 or 3 year bursts out of 10 or 15 years. But when it rewards us, it is not uncommon for the XAU, the Philadelphia Gold and Silver Stock Index, the big companies, to give 300% or 400% or 500% returns. Among the juniors, your listeners need to focus on the fact that only a small proportion of the juniors react well, because only a small proportion of the juniors actually exhibits quality. So to outperform the gold market, to generate alpha in the juniors, you need to be a real stock picker. You need to work really hard. If you do that, the rewards could be stupendous.
Right. So last year, and you do this regularly, when you are investing in gold, you look at the majors first, and then the mid-tier, and then some smaller caps, and then down to the exploration companies. Let's focus on Franco, because it's been such a great stock for such a long time. Always traded at a premium, but now has been hit because of First Quantum's problems with Cobre Panama in Panama. That makes up about 18% of the royalty stream, I think, for Franco. So for investors, I know you own a lot of it, to use your words, Franco. For somebody who's in it, maybe they're underwater, is this an opportunity, or do you wait and see? Do you cut your losses? What do you think?
I think that depends on who you are. I'm not a narrative investor. I'm very comfortable with volatility. I couldn't care less about day-to-day moves. But here's the arithmetic. By my calculation, the First Quantum asset, the Cobre Panama asset, accounts for about 15% of the net asset value of Franco. When that asset got called into question, the share price declined by 40%. So to me, it's simple arithmetic. You reduce the top line valuation by 15%, and you take 40% off the market capitalization. This is a no-brainer. But to me, it's probably more of a no-brainer because there's $10 billion in sunk capital at Cobre Panama, subject to international arbitration. It is about 25% of the export earnings of the Republic of Panama, and I forget how much of their GDP. The idea that the Republic of Panama can afford to be X 25% of export earnings, X at 6% of GDP, and then pay a $10 billion judgment in international arbitration to First Quantum tells me that there will be some restructuring of Cobre Panama. If there wasn't, in Franco-Nevada, you have an asset that was 15% of NAV that goes away, and the market cap declines by 40%. This is simple arithmetic.
All right.
Now,
Yeah.
caveat, I'm talking my book. I've been a pretty good-sized buyer of Franco-Nevada this week.
Okay. All right. Very good. And lastly, Rick, you're always good at sprinkling a few names out there for us and for investors. I know you talked about Guyana. You like some of the discoveries there, West Africa. So do you have a couple of names that you're really keen on right now?
Yeah, I like great big discoveries. You know, I like circumstances where all of my surprises are good surprises. So no mistake, in Guyana, the discovery that Reunion and G2 have, I believe it's the same discovery, separated by one property line. I wouldn't be surprised to see that it be a 10 million ounce deposit, and it could be larger, which is nice. So I like that. I like, too, the great big deposits that other people aren't looking at because the countries are strange or the commodity is strange. So as an example, I like Centaurus in Brazil. It's in nickel, platinum, and palladium, three metals that are all in the doghouse. So the stock is cheap. I certainly like Meteoric, which is a big rare earths deposit in Brazil. I love Sovereign Metals, which the market hates, which is an absolutely tier one rutile, which is titanium and graphite deposit in Malawi. The common theme is I like deposits with at least $10 billion in recoverable reserves and resources at today's commodity prices, and preferably 15. And I like deposits that other people hate for one reason or another. I want my deposit to be in the best cost quartile worldwide in their commodity, and I want the deposit to be in the highest return on capital employed quartile worldwide, with at least a 25% return on capital employed metric, and those great big deposits get it done.
All right. Great to see you. Lots of names there for us. We appreciate it. Always good to see you, Rick.
Always a pleasure. Nice to be back.
Absolutely. Rick Rule. He is the founder and president at Rule Investment Media.